More on this, let's talk to Hannah Ryder, joining us from London. She's an international development consultant and the CEO of Development Reimagined. Hannah, good to talk to you. All right, so the IMF raised eyebrows when it criticized the British plan, but it does have a point. I mean, there are virtually zero examples of trickle-down or supply-side economics working, and many strong examples of it doing the opposite.
Well, it's interesting that you say that it was rare of the IMF to comment on domestic policy, because that is actually what the IMF tends to do. And in many cases, it does make its support as a lender of last resort in particular, for developing countries, typically conditional on accepting the kinds of advice that it is giving to the UK at the moment. Now, the advice that it's giving to the UK is saying what you're doing is bringing in untargeted fiscal transfers. The IMF typically says exactly that to developing countries too. It will, for just recently, the IMF has agreed a program with Zambia, where the IMF has suggested that Zambia removes fuel taxes, fuel subsidies, removes food subsidies as well, which the IMF says are untargeted. The problem is that in a country like Zambia with a lot of poor people, actually it's very difficult to target the poor. On the other hand, with a country like the UK, which has a lot more wealth, it is possible to target the poor more easily. So in a sense, the prescription that IMF is giving to the UK is almost, it would be better in another context. But I think the biggest issue here, especially for developing countries, is that quite often what they want to do is to determine their own policies rather than have to take the prescriptions of the IMF. The UK will not have to necessarily do that. It may well be able to get itself out of this hole if it does change its policies and not have to go to the IMF. Whereas other countries are in a very, very different situation.
Exactly. I mean, that's what's so rare about this, to see that kind of criticism and very direct criticism leveled at a country like the UK. I mean, you know, some were describing the situation as being hours away from pension funds absolutely collapsing. So when we look at what the IMF does, and there has been criticism of the way it's doling out these loans, does it disadvantage people? What really is the alternative? I mean, some countries borrow from China, and we've seen some really negative consequences from that.
Well, the fact is, developing countries need extra money, and they won't be able to get that money from their own domestic taxes. They're not large enough economies. So they have to go to organizations like the IMF, they have to go to organizations like the World Bank, and they go to bilateral lenders. And China has played that role for the last 20 years in terms of extending more finance. Now, countries are only particularly dependent on China because others haven't necessarily been there. And even what China has provided is really a drop in the ocean in terms of what the needs are for actually, you know, kind of building more infrastructure and all this sort of thing. And we're seeing climate change, which is even creating even more needs. So I think the challenge is that, in fact, the reform, the institution as a sense, is just not fit for purpose at this point in time. It's fine to be able to give advice to a country like the UK, which can eventually get itself out of these problems. It has the wealth to be able to do that. But other countries just do not have that choice.
All right, Hannah, really appreciate it. Thank you.